Good afternoon, ladies and gentlemen. Welcome to LoFiTrader. We are going to go over a few key points that I want to make you aware of in the market, and then we're going to obviously go over a few of the stocks that you need to have on your watch list. So things are going to go a little differently than the YouTube shorts. So sit back, grab a cup of coffee or an ice cold one, and we're going to go through a few stocks. All right, guys, so right away we're just going to go over the SPY really quick so that way you understand where we're at and how this whole little meeting that I'm having with you right now is to be thrown in the garbage if this happens. But if not, we need to be prepared for a bounce in the market. Always be prepared, always be vigilant, and always be reactive. We're not trying to predict on this channel. We're only going to react on this channel, okay? So let's go ahead and minimize this big head of mine. And I want you to take a look at the S&P 500 here, okay? Down here is the daily. On the daily time frame, you can clearly see we have this beautiful uptrend. This beautiful uptrend is back down on the 21-day moving average. So this same uptrend on the hourly is the same uptrend that you see down here, okay? It's being held by a 21-day moving average, which is absolutely beautiful because this is usually where institutional ownership starts to buy things up. But here's the issue I'm having, and there's two of them. One, we are seeing a follow-through day on negative volatility. What do I mean by that? Well, on this day here, which was Thursday, we seen a pullback to the 10-day, and then we seen it gap down on Friday and head even further here. Now we had a bit of a push right at the end of the day, a push, and then a flagging sideways action. Now, if this wants to break through the 21-day moving average, that can look pretty scary for the overall market, and that's when I will be hands off and just watch the price action to see where we might catch next. But if you look previous to this, this uptrend has been being held by that 21-day moving average. 1, 2, 3, 4, 5, 6, and now we're at that 7th time. Will it hold? And if it does, here are the stocks that I want you to keep an eye on and the plays and how I'll be playing them. First off is Uber. Uber's finally been inducted into the S&P 500. That doesn't just give it newsworthy, but it also looks absolutely amazing fundamentally wise. So I've played Uber a couple of different times. Here I missed it, which would have been a nice play, at least a 1-to-1. But I played it down here. It was a beautiful play until it broke the 10-day moving average. That actually netted me 8% on that stock, which is a great take. If you aren't happy with 8% at each and every trade, then you don't know what you're missing. So 8% on that trade. And when I was looking up the fundamentals on this, which I did part 1 and part 2 of how you can scan for your own amazing stocks, so you can stop trading all this garbage that I see all over the internet. Go ahead and look up part 1 and part 2 on the YouTube shorts after this video. So we have Uber here. We had a nice pullback and a push higher. We had another pullback and a small push higher, which was actually another beautiful trade on my end here. When we seen this push up through this trend break, it went skyrocket to the north, and I actually took out half of my shares here before it broke down and exited me out at break even, because every time I take my 1R, I exit out of the trade at break even. So that was a beautiful trade, and I'm very happy that I was aware of what was going on in the market, so I could get my money out of it. Now, breaking down here, will we find support on the 30-day moving average? If we find support in the market and the market wants to head higher, that's good news for the bulls and bad news for the bears, because Uber might have a nice little breakout here. So you can see where I have put my alert. My alert's set at 76.77. Okay, that's just an idealistic area. I much rather see a new higher low being put in. What do I mean by that? Simply put, this trend break has a low and then a new higher low right here. So right here is your first low right here, and here's your new higher low because this low is higher than this low. So what am I seeing down here? I would love to see this low put in a new low here, and then a new higher low being put in the next day before we take the breakout. So we'll have to see what happens. Maybe we put in a new higher low. It is a discretionary buy, meaning I buy it if I deem that it's fit. So if I see a lot of volatility coming in, or volume, like right here, there's a nice excerpt of volume that came in right here on this trend break right here. Look at that. That is something I would want to buy. I would buy the break of this high, right? So it's absolutely beautiful. There's multiple discretionary ways of trading, but that's just how I am looking at Uber. Okay, so keep in mind a new lower high would be ideal for Uber if we hold the 21-day on the S&P 500. Next up is Root. Now, I will say, ladies and gentlemen, I took an emotional sell when I sold this stock. So I sold the stock at the end of the day for Root because I did not want to hold anything into the weekend, one, and two, I just did not know that the fundamentals were so amazing on Root. If you look up Root, you'll find right away that Root is making money hand over fist. I don't even know the whole news because I'm a technical based trader, but when I look up on my scanners, like you can watch in part 1 and 2 of the YouTube shorts, you'll see that I just punch in the criteria and whatever pops up, those are the technical plays that I go through. It's really easy. So technicals is all you need if you know how to do a fundamental scanner, okay? So Root here, I found out after I exited this perfectly timed breakout. You can see the breakout here, and where did I enter? The next day after a new higher low was put in on volume. Look at that volume play. I seen the volume start to come in on the 5-minute. Check it out. I'll zoom in on the 5-minute. Look at this volume. Absolutely beautiful. That's why I took this trade, because then we're going to push higher. It held its VWAP area, created a nice accumulation, new lower highs on the 5-minute, and then tested, came down, a new lower high, and then broke out to the north side. Now, I don't know what's going to happen in the market. Nobody truly does. But when I see actionable stocks like this, I'm willing to take the risk, okay? If you ever have anybody that says in the market, this is what's going to happen, don't take their word for it. They don't actually know. Nobody actually knows. But if we're willing to put money on it, like I did, then we're willing to put money on it, okay? So, beautiful base breakout here. Root is definitely one that you want to keep an eye on, simply because the fundamentals are there and it is showing amazing price action. It's showing a lot of volatility. Look at this. I mean, that was beautiful. If you could have caught this, oh my gosh, this would have been a absolutely beautiful episodic pivot. This is straight out of Christian Quilomagi's book. Look at all this volume that comes in after. Let me just take a stab in the dark here. This was up 32% at the open. This is an episodic pivot. If you would have gotten in, you could have taken a 5-minute range breakout on this, meaning this would have been your stop loss right here. This would have been your buy area right here. Absolutely beautiful. Not that color green, thank you. Absolutely beautiful trade. And now if we come back and look, we would be using the 10-day moving average as our stop loss, and you can see that, and we have to wait for it to close, mind you. We would still be in this trade because it broke down, but it got bought right back up here. So if you would have taken this trade as an episodic pivot, which I did not, we would have been risking 18%, and right now you would be at 293%, ladies and gentlemen. And that's why we study the greats. That's why we study Christian Quilamagi. That's why we study Dan Zanger. That's why we study William O'Neill. That's why we study all these people. Paul Tudor Jones. Today, who did I look at today? Today I watched Dr. David Paul, on the psychology of trading. Thanks to a good friend, Danny, I just recently met. He's studying some psychology, okay? Next up, if you don't know about NVIDIA, you're sleeping under a rock, or you just got to the stock market. NVIDIA is going to stay on my watch list. It's just below a 10-day moving average. holding a beautiful flagging pattern. Now, I started to get in some of my money here. I actually took a buy on here. After I got in and it just started trading sideways here and didn't have continuation, I decided to exit for the same reason why I exited Root. Of course, it did pull back and it's still setting up here. So I'm going to set my alert down here at 885. If this breaks through 885 and I see that big burst of volume coming in to keep this heading to the north side while the S&P holds the 21-day moving average, I'm seeing confluency in the market. I'm going to take this trade and continue making money. If you guys haven't seen the trade I took on this before, I've played this at this trend break at 779 and sold most of my shares all the way up here at 938. It made my month right there. That made my month and increased confidence like crazy. Also, I played this at the $500 break. I waited a long time, preached to a lot of friends on playing this $500 break, and you can see it right here when it broke out. Now, I tried it a few different times. I got in early, but if you could have just held on and waited for these new higher lows to form on this larger time frame, you could have made even more. Now, I will say, I cut out of this trade way earlier than I should have. I should have been in all the way up until 220, but I'm pretty sure I exited somewhere around 116. So I only made, let's see, percentage-wise, I only made about 10% on this trade, which is still good. It's still good, but compared to the stock and where it's at today and the popularity and how much I talked about that 500 level breaking, it's just not it's not the best trade. But green is green. I'm happy to be making money. Next up is Crowd. So CrowdStrike Holdings is a software company that deals with cybersecurity, and this thing is just trading sideways right now, and it's trying to hold this 50-day moving average. Every time it breaks down to this 50-day moving average, it holds that area. So right now it does look like it's setting up a little bit on this 5-minute, but if we put it on the hourly, this is not the cleanest looking setup. Okay, so what we had here was a huge push up on earnings. It beat its expected earnings by like 4 times the expected earnings, right? So 2, 4, 6, yeah, about 3 times. Let's give it 3 times, 3.25 times its expected earnings or EPS, which is absolutely amazing for CrowdStrike. And congratulations to anybody who held on to this and got some out in pre-market. But I don't play that. I don't play the earnings. I just think it's a gamble. So if I had this trade at all, I would have sold before this, regardless. But this came out absolutely beautiful. I was hoping it would hold out and have an episodic pivot and continue higher because this was over 10%, and it just beat earnings big time. Now, it wasn't a huge surprise to Wall Street because we're already headed up. But if this and the S&P 500 can hold their moving averages, I can see this being traded. Now, I'm going to wait for this thing to break out here or set up a better trend line. So if this thing can set up, maybe head down further, trade sideways, channel sideways a little bit more, and set up on this 50-day moving average, and I can draw a clean trend line, then that would be great. I would love to do that, and I'd like to play that breakout. But for now, I'm setting my mark at 338.50. When it breaks out of there, that's when my eyes are going to be on it, looking for that higher than normal volume. I got a couple more for you, so pay attention and make sure, if you haven't already, hit that like, hit that subscribe button, guys. If you made it this far in the video, I know you're here to learn. I know you're here to kick butt. I know that you're ready and willing to do whatever it takes to make that money in the market, okay? I've been doing this for 4 years now, and I tell you, it's been a long journey, but when you're obsessed, as I have been with the market, you're going to see big things happening. Just keep on keeping on. Never quit, as William O'Neill once said. Not just once, he said it many times. But ACMR, now this is a beautiful trend right here, okay? Now, I'm not seeing it hold any moving averages, so we might have a couple more days left on this, but we had a huge unexpected gap up here. They were only expecting 3 cents. They earned an extra 40 cents on their shares. So if you were a shareholder owner, you gained a lot more money on those unexpected share earnings. Extra 40 cents a share. Volume came in, a lot of volume came in, and now you can see what Mark Minervini coined as volume price contraction. So you can see this way up here, this huge blurb of volume, and then you can just see it dying off all the way down here. What does that mean? Well, that means you have a lot of buyers, but not a lot of sellers. So because it's holding on to that, and what space is this in? Let me just figure this out really quick. Because if this is also in a hot sector, which is energy at the current moment, ACMR, then that's definitely one. That'd be so producers in manufacturing or industrial machinery. So let's take a look at this. I'll just read this really quick. So it's a semiconductor. So sale of single wafer wet cleaning equipment. It supplies process solutions that semiconductor manufacturers can use in numerous manufacturing steps to remove particles, contaminants, and other random deficits. So it looks like a cleaning component to clean something for your semiconductor. So it's in the semiconductor space, which is nice. But if you're in the semiconductor space, again, NVDA is going to be your leader. So if NVDA is flagging and it breaks out, then it looks like ACMR will too also break out the same way. So NVIDIA is a 4.5% mover, as ACMR is now up to 7.9% when it moves. So if you're looking for those faster movers, ACMR might be your stock. Last one's in the medical field. We talked about this before. It's setting up a William O'Neill type cup and handle. My alert has already went off on this because of this break, but I was reluctant to actually get in. So I'm going to set another stop right up here at this top. It's actually very beautiful the way this thing has set up for us above a 200-day moving average. Been trading sideways for a long time now. If this thing can find a beautiful breakout to the north side, we have this big cup, this beautiful handle, and now if we break out from here, this might be what this stock needs to continue higher. Now, not to mention, SWAV looks beautiful on the overall financials as well. So we can just pop this up. I can show you how I take a peeky gander at it. You can see this beautiful curve, this trajectory up where they're actually starting to make money. For a long time, they had no net income, and now you can see, boom, all of a sudden they are making money, and that's always good, especially in the medical field, because a lot of times these guys have to dilute their shareholders year over year in order to continue funding their process. Okay, so Shockwave Medical operates in the medical device company, which concentrates on developing and commercializing products intended to transform the way classified cardiovascular disease is treated. All right, so that's about as far as we need to go into that. So guys, that's just a quick run through of what we have in the market. I hope you enjoyed this. If you did, leave a like, hit that subscribe button. I'm here. I want you to be here with me. Let's grow this community, and we'll see you guys on the next one.